Welcome to the Trading Lounge and the day ahead report, and we're looking at the Dow Jones here on a daily chart, and this bar here is last Friday's bar, and we can see that that's on higher volume than the previous day, and the previous day had a nice long range here. So we've got this short trading range here. So obviously this means that there's sellers in the market which were pegging the price higher there, and it's been sold off at the end of the day. So we do have a correction unfolding from here, and we understood that anyway. So what we'll be looking for today and tomorrow in the US is support, because once a price finds its high, then it has its reaction from that, and its reaction is the corrective pattern. So we're observing the corrective pattern at the moment, so we'll keep an eye on that. But once that's complete, we feel that there'll be some more upside. And we can see that by looking at the Nasdaq, the daily Nasdaq here. There's the most, I won't go into it all, but basically we see this strong move coming through here. So we've got from this low here, we've got up for 1 and back for 2, up for 3, back for 4 here, and we're going up for 5 here at the moment. So it's still pushing up, but in here we've got up for 1 and back for 2 here. So we've still got this little third wave going through here. So we still have a bit more of a push here in the Nasdaq before it finds its high here, and we can see that in Apple's trading up around the $700 mark now. And also when we look at the transports as well, in the US, it's a market we haven't looked at for a while, and it's important. It's got nice support on the 5,000 here as well. So really, while the the Dow Jones transports are above the 5,000 here, and I'm pointing it out now because we can see that it's really having a go at these highs here. So it's got a good opportunity to break out of this pattern through here. So that's something that we can keep our eyes on as well. And we can also see within the treasuries as well, be it 10 years or 30-year treasuries, where we haven't looked at this for a little while, but I've just always keep an eye on it. We've been tracking this 5-wave structure to the downside through here, in terms of, obviously the third wave in the middle here, the fourth wave, and then we were counting the 5 waves down through here. So we can see this pushing up here, and it hasn't really run its course to the upside yet. So we'll still see more upside here. So why the treasuries, these are the interest rates. So why these are pushing up here, we'll see the bonds market push down, and this market should follow be in line with stock as such. So there's good cause for further upside. And when we look at it on a intraday chart here, the S&P 500 on a 4-hour chart, we were looking for the market to basically to break out of the 144 here, offering really good support through here, which is 77 or 72 really, and up to the next 72 here, the 1472 here. So that's doing its thing, and it's correcting through here. And if this will be a little wave 4 here, this is a little third wave in the middle here. So we've got a little 1, 2, 3, 4, 5 here, but we've still got this little wave here. So we've got this up for 1 and back for 2 here. This is the little third wave all through here. So we're looking at this being the 4th wave here. So let's just see how that finishes up, and see if we push up for the next high through here. Of course, if this gets out of hand, then we'll take it from that point there. So 1450 as it can certainly come back to 1450, but finding 1450 as resistance, then we would have more of a larger bearish picture unfolding at that stage there. But just drilling in and having a bit of a look at that's what we're kind of looking at through here. So a couple of things here. First of all we're looking at a wave 4, so we're looking at the 38.2 retracement level, which would be taken from this little structure here. So we've got wave 4 in here as such, but this little wave 1 and wave 2 here, so we've taken it from here to the top here and coming back here. So it's sitting in there quite nicely. But we're not into picking lows so much. We'll point them out, but I still feel that there's more downside to this to come. So let's just allow that to mature and polish off, and then we'll look for some sort of volume support or sign for it to move to the upside. And the Dow Jones is the same as well, but the Dow Jones here, we're looking at this particular number here is the most important for us at the moment, the 13,500. So we're just seeing the market being pulled back into the 500 area there. So let's just allow that to finish off, and once it's finished, then we'll see what sort of support we get. It's nice if it does come down through here and then get back up and find support. Then it just gives us a price point to work with. But it's just dangerous in the middle here when it's floating here to be long or short here, because we know that there'll be buyers here. But yeah, so just got to give it time. That's pretty much it in a nutshell. The European markets are slightly different from one another in looking at the DAX and the FTSE, so to speak. The DAX here seems to have a wave count that could have a possible top in there as such. So we've got this, if we just take this little A, B and C correction here, and then we take this as wave 1 up through to here and wave 2 to here, then we're looking for 5 waves up for third wave. So this would be the 1, the 2, the 3, the 4 and the 5 to there, so the 4th to here and the 5th to here. So we can have more of a serious top here in the DAX, so just be mindful of that. So let's just see how it sort of sits at that level here at the 74 here. This is just the 8-hour chart here, just to make it simple. Let's just see how it unfolds here at the moment. And the UK market is slightly different. So if we bring in here the move here for the FTSE as such, after it's had its big correction, it's taken these highs out here now. Over here, so that's good, but we only really have 3 waves up here, an unfinished and undeveloped move to the upside. The Australian market's a bit like this as well. The FTSE spent more time here than the DAX did. The DAX ran to the upside, where the FTSE just sort of stayed here. So it will be interesting to see what occurs here, but this move to the upside is not complete. I've counted as an impulse wave. It could be a B wave up, in terms that this whole structure down through here is the A, the B and the C wave as it is, but just the A wave, and this is going to be a B wave up here, and then we get a C wave down through here. So basically a larger correction across the 5-8 could be a possibility, but let's just stay with what we've got for the moment. We'll only go into that bigger corrective pattern if we start seeing overlapping wave structures with this current move through to the upside here. And this would be the same for the Australian market as well, in terms of its move up. If we just start from the bigger picture first, we'll just take this back through here. Now, we're looking at a wave 4 here. Now, the trouble with wave 4s is that if waves 1 and 2 are simple, then wave 4s can be sideways and complex. This move down here can be counted as 5 waves or 3 waves, depending if you're looking at the cash or the futures. So this move up through here, if this was an A wave, then this would be the B wave, and it's okay for the B wave to take out a top there. If it does that, it means that the whole corrective pattern is quite strong, and we wouldn't necessarily see an expanded flat coming down and taking these lows out here. We would see something more, of a higher ending pattern through here. So this will just depend on what other markets do, of course, as well. But we're just sort of mindful of that. So really, if this market moves down through here and takes out the top of this wave 1 here, then we start sort of considering this being a B wave here, and we need to see a 3-wave swing here. So an A and a B and a C, and then moving up from there. However, if it develops support on the 4-4 here, 4,400, and then find support on that, and then then we'll start looking at the further upside then in that case, and then when we do that, it will be this pattern here. So we can allow this to do its swing here, and it's still got more to come here. So this would be the A wave, the B wave and the C wave coming down through here across the 44 here. So there is still time to spend here, and normally the runs in the market occur on the Mondays and the Fridays, and the follow through on the Monday. But our Monday didn't really follow through that much, nor did the US markets as well. But our move down on the Australian market was a smaller range on the Friday, but on lower volume. So that's why I'm feeling that it's corrective here. We'll just a smaller corrective pattern. So we'll just stay with that smaller corrective pattern here, and in looking at that smaller corrective pattern here, you can start to see the swings in here. So I've got this first swing down through here, then we've got this ABC pattern through here. What I was sort of wondering here, are we going to get this as a little A, B and C here, or are we going to get a larger picture to the downside here? Because as it stands at the moment, that low there has got 5 little waves in it, the 1, 2, 3, 4, 5. So that could be the low there. The other side to this would be if that low gets taken out, then we'd have to count 5 waves down. So we'd be counting 5 waves down from, if I just bring in this tool here, so it would be down for 1 here, back for 2 here, down for 3, 4 and 5, coming in like that through here. But it is a bit large really in compared to what's sort of going on here. But let's just observe this. So that you wouldn't go long unless you had support on the 4-4 anyway. So let's just see how we go with that. Let's have a look at commodities as well. They're softer as well, in line with stock as the US dollar pushes a little bit higher, while rallying off the 79 and looking back towards the 8. Okay, copper first, and once again we're seeing the top of this structure move into place here. So we're looking at a wave 4 moving back now. A wave 4 normally moves back to the wave 4 of 1 lesser degree, so we can be looking back down at this level through here. The other way to look at this is through the retracement level. So we'd be looking at this degree of structure from here, from 2 in brackets, half brackets here, to this one through here. So we'll be looking at the 38.2 retracement level here. So it's in amongst this. And normally what you find as well is that when a market is dropping, they'll drop to this, the first consolidation of the most volume there. And if that fails, then it'll drop down to the second one. So that's pretty much what it does, and then normally they're occurring around certain numbers anyway, so they all kind of match together. But we are looking at this being a corrective pattern as well, while US dollar retests 80 in that case there. So also we'll see US BHP at $72 here, correcting through here as well, so it will struggle through here, but it's also meeting supply back up through here as well. So we'll see that on local USB BHP as well. The line in the sand for BHP in Australia would be the $34 there. If you drew a line across there, the Fibonacci 34, you'll see that it's the main balance point within the market there. So support on that in the longer term would create the long trade, so to speak. So, but otherwise we need to look at the rallies being corrective. The next metal is gold, of course, part of the metals story. Once again, not a lot to say here at the moment. We can see that this pattern was like a spring being loaded, and off it went. And so we're up at this, the main number up here is the 1800 actually. So that the 1772 here will kick in for the traders that know that when you get 772 together or 272 together, it's stronger than the normal 72. But that's playing out through there. And also it's very much the same as copper as well, in terms that it will pull back to its 4th wave of 1 lesser degree. So we don't really need to look at that spike down here, but that consolidation there on the 1730. So the group 1 is a real possibility for that to pull back. Of course, it's got the 1750 there as well, in terms of finding support as well. But this, you got the 1750, but it's just this is the real support area through here, because that's where the volume is sitting through there. But anything that we see here is as a corrective move through here. So once it's complete, we'll see it move up to the 1800. and we'll see a larger correction across the 1800, and that would be a really nice setup to go up to the 1900 and 2000 at that stage, if that's going to be the case. Because if a market's pushing up, the places that they'll fail is that they'll fail either at the midpoint, the medium level here at the 1650, which it didn't, and then once it's on top of 1650 as mentioned, then basically we just have to be positive at that point, and that's a good thing about the levels. Being on the right side of certain numbers can be very helpful as well, because we tend to get lost in the Elliott, and that can cause us a lot of problems. So using support and resistance is such a huge help in using Elliott. It just improves it, strengthens it a lot. So we use Elliott for direction, but we use the price to trade from. So anyway, that's not missing much here at the moment. The better trade will come later on across the 1800 here once that's got support. So we can expect, this is the first reaction area at the 72, and this will occur here, and it will eventually push up to here and have another correction here. Well, it can only do two things once it gets here. It can either have a correction, hit here, have a correction from here, and in sort of an ABC correction, and then push up through here as the first high above the level, and then have the ABC across the level there, or some sort of triangle pattern. The other thing is that it can shoot straight up through it, and if that's the case, if it shoots straight up, well, the distance it goes above will be the distance that comes below, and it will work across the 1800 that way. So there's only two things that can really happen there. So we'll see what occurs there. Next is oil, and that really fell out of bed, didn't it? Okay, so that's happened since I haven't looked at it, but yeah, so anyway, what I would have said here anyway is that it's hit the 100 here, and we can expect a reaction from here. The reaction's been quite severe. I'm not sure what that's where that's come from. We'll check on that. But the normally what happens here is that it would come back and find support on the 80 first, or check that for support. If it fails there, then it obviously just moves down to the next level. So that's what it's doing there. So we'll pull this apart and have a look at it. But that's why it's important to trade to the large number and exit from there. And 1 being the strongest number of all, followed by 5. Let's just have a quick look at silver as well while we're here. So the silver market here, we're looking at this being a wave 4 back as well. So the way we're counting this is up for 1 here, back for 2 here, the third wave up through here, finishing in here, and looking for a fourth wave to pull back. The fourth wave pulling back to the 38.2 retracement level once again through here, which is pretty much at the 34 mark here. So we'll see that vibrate across the 34 mark here. There's probably a bit more to come here. We can get a little move back down through to here, but we don't want to see it. We don't really want to see the 34 become the retested resistance within that. Otherwise, we need to start looking at this move as being a more of a top in terms of down for 1, back for 2, and a third wave unfolding, and a fourth and a fifth wave coming down through here. So we need to work out if this is going to be if this is going to have the price action of a third wave here, but we don't want to see it. We don't want to see that 34 become the retested resistance through here. The next support, of course, is this level down through here, as you can see. Let's have a look at currencies. Starting with the US dollar here on the daily chart here, we can see that it's obviously trending down very strongly, and as this is trending down strongly through here, we're seeing gold push to the upside, and copper and so forth push to the upside, and also the euro as well. But there is still more downside to this, but we haven't had our retest of the 80 just yet, and it looked like it's going to do that from here. Let's just see how it goes. So if we just drill down into here a little bit further, normally what I find is that it normally can have a retest from the 79, but normally from the 78 through here. So normally a series of retests through here. Obviously, when you're looking at this trend through here, is it's got its beginning, its middle, and its end, and because this is the fastest bit through here, then it's obviously the middle of it as well. Also, too, we can count this as a third wave just because when we put channels through here as such, then any breakout through here really, cements it in as a third wave price action. So we normally see a retest. If we put another parallel line in the center of this here, that's normally the retested line that it will come to. But we like to use the price more so through here. So in just looking at this through here, this little corrective pattern within here, we can see that it's just starting through here at the moment. It does appear to be corrective, and if we drill into that a little bit further, just to get an idea of it, we can see that we do have a corrective pattern within here because it's got this three wave pattern here as an A and a B and a C wave, and you can see the 5 little waves in the C wave here as well. So it also looks like we've got this as an A wave, an ABC for the A wave, a B wave and a C wave through here. Now that little C wave is probably not finished. There's probably another little push in through here, but that could just make the A wave again and then the B wave and then a C wave working higher. So what we need to do here is just keep an eye on this particular pattern through here, and it is operating at the 79 here. It's really only if it stays within group 1, the top of 79.30 here, if it stays within this area through here, that's one thing. If it finds support on top of the 30 here, then we'll see it push back up to the 80 at that point. If it struggles here and it's just going to be a small correction, then you'll see it, and you'll see that the 79 will become the retested resistance, and then you know that we're heading further down at that stage there. So it's probably likely to occur like that. So you need to look at the euro doing the opposite to the other side. But this is a really nice little line in the sand that we can use. So just bear that in mind when we're looking at the euro as well. There's one thing here that once we left the 25 and then we moved to the 28, then the 130 is the minor level at top of group 1. So it's only normal to expect a correction across here. Look, we may get another push up through here. We can also get a push down here, but it's at some stage while we're in group 1, and what I call group 1 would be the 10, the 20 and the 30 here, while the price is under here, or even in fact it can go higher than the group 1 here. But finding support on top of this group 1 is another story. So it should really have a correction across here. So we need to be mindful of that. And just because we've seen a strong push up through here, at some stage it will have its correction through here. Because when we look at this unwinding to the upside here, it started off through here, and it's been developing really quite nicely. So this is the strongest part of the trend here, and that's probably it sort of right in here. So it's due for a correction, and it would just normally have it at this level here. So it was a little bit like the Australian dollar at 105. Just bear with me a second here till we get this back here. So it was when this market was pushing up above the 105 there, I knew that it could go to the 106.50, which is always a strong number as well, but it normally doesn't go too far past, without having its correction at the 105 there, and it's doing that now. So we've got that move up through here, and this is the first swing to the downside. So it's going to have, once it finds its low, it's going to have another retest of the highs here, and then another one down. So we're looking for 3 swings across this particular level, and that's what I was kind of thinking with the 130 with the euro as well. There's a couple of ways to count this here. There's the count that's on our charts, on the Elliott charts. That's fine. But as I mentioned the other day, this little expanded flat down here, I know it's an odd looking little small wave 1, but I've seen this before as well, especially when we're down at 50 cents quite some time ago, and it took us a while to work that out as well, that particular low point there. But I see this as being the same thing, and what we were talking about the other day was looking at this as being up for 1 here and back for 2 here, and then all of this being the third wave up here, the wave 1, the wave 2, 3, 4, and 5 here for the third wave here. Now on our charts, we've got this labelled as wave 1, and that's fine too, but at the end of the day, what we are looking for here is a wave 4 here would be pulling back to the wave 4 of 1 lesser degree, which would be 104.30 in here. So into this area here as such. For this wave 4 here, that's what we're talking about last time we were talking on this video, and then a wave 5 up. So, but either way, it doesn't really matter. This is the first leg that's coming down through here, and it can be counted as an A and a B and a C, but it can also be counted as a 5-wave structure as well. So that still doesn't matter as well. What we are more interested in here is that looking for the trading levels classic pattern across the 105 here. So we've got the arrival, the reaction, the support, the first high above the level, which is in 5 waves, and then we're looking for an A and a B and a C wave across here, and then finding support here. So we're going to be in the process of looking at 3 swings across here, the A, the B, and the C across here, and then looking at it from that point. So that would be the most common pattern that would be looking for. If this is going to be a 3-wave structure down through here, then we'll see support back up here, and then we'll see a new high being made straight from this point here. But either way, whatever happens, if this finds support back up on the 105, you can trade up to the 103, get out. If the 103 finds support, then you can trade up and navigate the 50 and get up to the 72. And if the 72 finds support, then you move back in and go up further. So it's just a matter of working up the scale, so to speak. So yeah, that's sort of how it is through there. So just be aware of that there. If we can just, let me just have a little look in here, just find my charts again. I wasn't totally organised in here. Wanted to go a bit smaller than that as well. Looking at that pattern to the downside here, just want to have a quick, here we go. So the way that this can be counted here is that the 1, the 2, the 3, the 4, and the 5 coming down through here, and in that 5-wave structure coming down here, there'll be one more little push down here. As I mentioned before, the 144 is very important, and also the 130 here as well. The other thing to be aware of too is that when a market, the distance it goes above the level is a distance it can travel below the level as well. So that's like a full point there, and so is the 104 down here as well. So yeah, it's the 104 here. So just be aware of that, but certainly just allow it to play out through that. And also, if you're trading this as well, keep an eye on the bonds market as well. Alrighty, well, that's it. So just sort of recapping a little bit is that we understand that the US dollar is showing a bit of support and a bit of a rally. How far it rallies is another question. So keeping an eye on the 79 is really important, and the 79.30 is really important. The pullbacks in the US stock markets, we feel that they are just corrective, but we just monitor them to see how they develop as corrective patterns. We can see with the Nasdaq it's got further to go to the upside, so we'll stay with the thought that these are corrective patterns, and we will be seeing more to the upside. But what we do need to find is we do need to find support for those corrective patterns that are pulling back in the US markets. And also on our local market as well, the SPY as well, in the cash market, they are correcting as well. We need to see where their supports come in as well. Now, there wasn't much momentum on the Friday and hardly nothing on the Monday as well, because we had those strong moves like earlier in the week, and earlier in the week we normally have corrective patterns within the week, so we're kind of ahead of the cycle a little bit, but we will be having this profit taking on the Tuesday, which would be normal, and it is normally the Tuesday. The Wednesday we've got the choppy sort of days, and Thursday being a bit of a bear day in the cycle. So the cycle's not quite there, but we can still work with it. But the main point is finding support within the market in in this current pullback within the market. That will take out some of our stops in our markets, but better to have a small loss and a controlled loss than a loss that gets out of control. So yeah, alrighty, well that's it. So good morning and good luck.